Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about what on earth is going on with Shopify. Today alone, the stock has squeezed up 25% and growing. So we're going to be talking about what does this mean for Shopify? Is this thing on its way up to, $200, $300? Is this just the start, or is this just a little pop-up and we're going to get some sell-off? So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about trading and investing in the market, check out our school. We have our Black Friday sale for 51% off. You guys can use code Black Friday, 51% off, where we talk about how to find stocks, our strategies, our approach. For me, I've been a full-time swing trader for almost 7 years now. It'll be 7 years at the end of this month. So, we talk about all the strategies I've learned, how I find stock, how I do this full-time. So check it out down below. And guys, let's jump into this. So Shopify, what on earth is going on with this? So right now, every single quarter, the companies come out and they release something called an earnings report. And this is where they give you the good, the bad, their revenue, their projected growth for the end of the year. And Shopify did not disappoint. Now, Wall Street, before the earnings, they come out and they say, hey, we expect Shopify to bring in $1. And if that just says Shopify brings in $1.50, this often causes the stock to go up, because a lot of retail investors, a lot of hedge funds are very, very excited for the future that Shopify has. Now, but imagine if Shopify brings in, instead of $1, they bring in 50 cents. This is the complete opposite, and this will cause panic in all those people that are already holding Shopify to want to sell their shares because they think the company's over. So let's look at the stock here. So with Shopify here, like I said, in the matter of about a couple of hours, we saw this. Let's see this. The stock went from about $87, actually lows at $82, all the way up to $114, which might not seem like a big move, but this is millions of dollars in market cap and a spread of 28%. Now it's up about 25%, which is really, really good. But why are we getting so much buying pressure? Now, this is why right here. Shopify stock surges as revenue soars. So shares of Shopify were rising sharply after e-commerce platform reported a jump in third quarter revenue from a year earlier. So that's why we're getting buying pressure. Shopify stock gained 14% to $102 pre-market. So during the market hours, it squeezed up a little bit. For its third quarter, the company reported revenue of $2.16 billion, rising 26% from the year ago quarter, but below the estimate of $2.9 billion. So they still beat, some expectations for revenue. Q3 was outstanding, further establishing Shopify as a leader in powering e-commerce anywhere, anytime. So I really think that right now, let's see here, Shopify achieved 26% revenue growth and 19% free cash flow margin this quarter, making our sixth consecutive quarter of greater than 25% revenue growth. Okay. All right. So that's doing good, right? That's doing really, really good. Now here, let's see what JP Morgan Chase said. Shop seemed priced for perfection, which in our eyes creates more downside risk rather than upside risk into the print. So that's what JP Morgan Chase said, that there is still some downside potential. Of course, I think that with Shopify, right, as we zoom out, what do we see here? We saw this stock perform very, very well. And it led up to, in like mid 2020, all the way up to 2021, during all the lockdowns where everybody was buying things online because you couldn't go out, you couldn't go to the grocery store, you couldn't buy things at physical locations, and people really just didn't want to because there was so much fear out there. This caused this stock to squeeze up, beating expectations. A lot of people thought that this was going to continue to when the lockdowns were over, and obviously the stock sold off very, very quick, about 85%. Now, it is slowly starting to finally get some rebounds, as you guys can see on this little trend here, where it hits it, and we just had some good tendencies of getting buying pressure. We do have some resistance right there. So it is forming a nice channel upward trend. So looking at some of what the, what like the experts think, I think is somewhat important here. Let's go ahead and see what they say. Let's see here. Let's go up summary right here. Okay. So there is no data, surprisingly, for the analyst rating in the price targets. But I think this. I think that Shopify is a growth stock. It's going to be very volatile. It's not going to be like investing into Apple or, Coca-Cola or, Home Depot, those more established companies. Shopify is a high growth, high risk stock. At the end of the day, for me, I wouldn't have shares of it. I think it's way too volatile to put in my long-term portfolio. And if I were gonna invest into this thing, I would keep it well under 1% of my portfolio, meaning for every $100 I have invested into other stocks, ETFs, bonds, whatever it is, I would put $1 into Shopify. That's the approach I would have personally. I think that Shopify does carry a lot of potential for e-commerce, but I think e-commerce is getting more and more competitive every single day. With Amazon, with Target increasing their online presence, Walmart increasing their online presence. Yes, Shopify will carry potential because it's a different type of online brand, so to speak, and it'll probably always have a little market share. But for me, I just don't want to have any shares. So guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe, and we will see you guys in the next one. Don't forget to check out our school, sign up with Moo, which is the broker I use, and we'll see you guys. Take care.